Okay, so now we're going to work through Section 8.2. Section 8.2 is about prepaid expenses. Now, this is going to get a little back and forth, a little crazy, but basically a company, instead of doing prepaid assets like prepaid insurance and things like that, they actually use it's a prepaid expense in the fact that we hold what we've purchased in the expense account initially instead of the prepaid asset account. So if you have insurance expense and you have prepaid insurance, okay, what these companies are going to do that want to do it this way, they will record when they buy the insurance, they will record it as an insurance expense. Okay, when they buy supplies, they record it as a supply expense. Then at the end of the year, they look at what they have left in supplies or prepaid insurance. And at that point, they do an adjustment and they move that to the actual asset account. Okay? So companies can do it either way. They can do a combination. Actually, the company we're looking at is going to do it as a combination. So just to do some initial notes, prepaid expenses versus prepaid assets. Okay, and a bit like I said, a business can choose, they can do a combination. All right, so here, when we buy something like insurance, supplies, it gets recorded as an expense. Okay, versus when we are using a prepaid asset method, when we buy, we record as an asset in an asset account. Okay, and then for the prepaid assets, at the end of the year, we look at the amount not used, okay, the amount not used, and that becomes an asset. Okay, and this is when we move it to the asset account. This is an adjusting entry. Okay, let me put that in here. This is the adjusting entry. Okay, this is the initial entry. This is the adjusting entry. Okay, over here at the end of the year, the amount used becomes an expense. Okay, so this is the amount not used. We move back to the asset account. Here, we're already in the asset account. We look at what we have left. The amount that we used becomes the expense. And again, this is with an adjusting entry as well. Okay. Then, when we close, the expense account is closed. Okay, we have to take all of our expenses to zero, right? Okay, same thing here. Expense account is closed. This is a closing entry. Okay, and we get those expenses down to zero. All right, now with this side, we're good, we're done. We start buying supplies again, or we start buying insurance again. We keep adding it to the asset account. Okay, here, because we want to keep that value in the expense account, at this point our expense account is zero. Okay, and we recorded the expense correctly in our closing entries, okay, but it's now 0. So we have to do this one more step, okay, and this is basically on January 1st, we have to reverse that entry. We have to reverse the adjusting entry. Reverse adjusting entry to have a balance for the expense account. Okay, so in this situation, we are going to have a balance in our expense account all year long. Okay, until the end, when we adjust it, close it. But then at the beginning of the year, once we've closed it and we've done everything we need to do for the end of the previous year, we reverse this adjusting entry so that, let's say if it's supplies, it comes out of, that amount comes out of supplies and back into supplies expense and sits there through the year. And as we buy supplies, we're going to keep adding to supplies expense. Okay? All right, so we've got this. This is what we've done always. This is a different way of doing it. Okay? So, giving an example here again with supplies. When we buy supplies, we are going to increase supply expense. Okay? Or this could be insurance or whatever else we're going to use this for. Okay? When we adjust, we're going to increase the asset supplies for the amount that we still have, for the amount left. Okay, because we still have it. And then we're going to decrease the expense, because we've been carrying it in the expense account. So now we're going to decrease it by that amount so that what's left in the expense account is just the expense. Okay? And then when we close on December 31st, we have to zero the expense account. All right? We close it. And then we have to reverse it. Can you not see all that? Nope. Alright. And this is going to be on January 1st. And basically you're reversing the adjustment. Okay? So we'll decrease supplies. And supplies should go back to 0. And we'll increase supplies expense. And this is to start the new year. Okay. So now we'll work through it, but I wanted to kind of talk it through and explain before we jump into the working together. All right, so now let's do that. Let's jump into the working together. And there's a good chart, comparison chart on page 246 in your book. And of course, y'all know the pictures are pretty helpful. All right, so on working together, we've got Praxton Incorporated. It gives us the balances for December 31st. And it gives us our general journal. And then it says, use the following adjustment information to journalize the adjusting entries on December 31st. Okay, so December 31st, whoops, nope. Adjusting entries. December 31st. So it tells us that we have $400 left in our supply inventory. So because it tells us because, well, let me show you to here. Because it's labeled here as supplies expense, we know that they're doing a prepaid expense method, okay? Here, insurance expense, we know. Here, for prepaid advertising, this is not going to have a reversing entry. This is not, we're not carrying the balance in the expense account all year. This is going back to how we originally learned how to deal with these assets, okay? So, when we look at this inventory, we know that this is going to be our adjustment because we're going to take it out of supplies expense and move it to supplies because that's how much supply inventory we actually have. Okay? And then same thing for insurance. This is how much we actually have. So we've got to increase prepaid insurance and decrease the insurance expense. Okay? So let's do those two before we get to the prepaid advertising. All right. So we need to increase supplies, and it's just the number it gives us, 400, with a debit, because we're increasing our asset account. We're taking it out of expense, supplies expense. We got to decrease the expense with a credit of 400. Okay? So when we finish the year and we're doing all our financial work, our supplies account, which is an asset account, will have the $400 in there, which is correct. Okay? Our expense account will have everything except the $400 in there, which is correct because that's what we've used up during the year. All right. Then also on the 31st, we'll do the same thing. Prepaid insurance. That's our asset account. It's $600. And the insurance expense, where we've been carrying that all year long, is going to decrease by the $600. Okay? All right, so for the last one, this is advertising, prepaid advertising. So throughout the year, we have or have purchased $80,000 worth of advertising. Okay, we've used, it tells us that we've used $30,000 of that. So that $30,000 is what we need to expense. That's what we used up. So we have to decrease our prepaid advertising and increase the advertising expense. All right, so advertising expense needs to increase, so therefore it's a debit for the $30,000. And prepaid advertising is decreasing by the $30,000. Okay, so that's the adjusting entries. Then we would go through all the closing entries, do all our financial documents, and then once we've closed everything, we would actually need to do the reversing entries for these two. Not for this one, because this one's fine. This one's that normal way we learned how at the beginning of Accounting 1. Okay? This is using the prepaid expense way of keeping track. So we have to do the reversing entry so that we can get this balance back into the expense account where it'll be our beginning balance for the new year. And then, of course, when we buy supplies, we'll continue to add to the expense account. Okay? So all you're doing is reversing these two entries. Okay? Therefore, it's called a reversing entry. And you put it in the journal that way. Okay, and this will be on January 1 of the next year. So really this would be, we've been doing 2018, so I guess we should do 2019 January 1, and we're just doing the opposite of what we did up here. And with the same amount, the $400. Okay, and then our second reversing entry is insurance. And expense. And prepaid insurance. For the 600. Okay, so that's really it for 8.2. It's just getting your head around that you're doing things in two different ways now, and either way is fine. I do wish I knew if one is more used than the other. Okay. You know, to me this is kind of an extra step, so it makes me curious as to if people actually use this very much. There may be a reason. If they do a lot of, if they use almost everything, then it might be easier because it's already in the expense account. So, all right, that's it for 8.2.